Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Seema Shah with us right now. Thrilled to have her with us from London, always here on the shifting tides that we see with Principal Asset Management, their chief global strategist. Seema, I look at the discussion of the last 48 hours, maybe 72 hours, and there seems to be a threat to technology, a threat that takes risk loving out of the markets. Is that shiftable? Do you think that there can be a rebuttal where we get back on board and optimism about software, AI, and technology?
Yeah, hi Todd. I certainly think that this is a fleeting moment. I mean, I do think that the narrative around tech, the potential displacement from which would come from AI, is something which is going to be lingering in the market for a while. But overall, I do think that sense of risk on can return. You know, the macro backdrop is pretty strong. There's a lot of concerns at the moment about what AI could do to jobs. I think a lot of that is a little bit misplaced, very, very forward-looking. So I think as time goes and the market should settle down and start to really refocus on those fundamentals, but I would continue to expect choppy markets going forward.
So, Seema, we've seen that rotation out of some of the high growth, higher multiple stocks really starting kind of late last year and into this year. Is that a short-term trade? Is that something, a longer-term theme for 2026, maybe into more value, into maybe smaller and mid-cap?
Yeah, so we have increasingly light small caps since around Q3 of last year. And there's a couple of really key reasons. One is, you need to have a constructive growth backdrop. Certainly that's something that we're seeing, not just in the US, but globally. You need to have rate cuts. You need to have ideally signs of deregulation. So these three things are all coming. And then especially at a time when valuations are really very favorable for small caps. So that continued to be the case. And similar to value as well, like a lot of the stuff which has been somewhat unloved has been shifting towards looking at other parts of the market, such as value. I think what's been interesting is that there's a number of different themes going on in the market, though. So, of course, there's a shift towards small cap and value. There's also been this kind of really strong performance from some of the defensives, and then at times really strong performance from deep cyclicals. So this is a confusing market. There's a lot of different cross currents going on at the moment.
Paul, I mean, this really caught my attention last night. Netflix's forward PE on the Bloomberg is higher, larger than Microsoft's forward PE.
There you go. Okay.
That is how things have shifted.
That's how it has. Seema, we've seen, as we look back to 2025 and so far this year in 2026, non-U.S. equity markets outperforming the U.S. here across the board in a lot of key geographical markets. How do you think about the U.S. versus rest of the world?
Yeah, this is one of those trades that started last year. There were question marks around whether it's going to be sustained for 2026. But as we've seen, you go into this year and actually it seems like it's gained momentum. We've actually seen more and more clients really becoming more interested into the international trade. And again, there's a couple of reasons for that. I mean, I think the global macro performance continues to be pretty strong. You've got good, supportive fiscal and monetary cycles in a number of different parts of the world. There's a weak dollar. And then on top of that, I think the lack of certainty with regards to US policy is really starting to grate on a lot of investors. And so when you have got these cheaper valuations in international markets, when earnings growth for these markets is also performing fairly well, and then you have the policy uncertainty thrown into there, suddenly that international space is looking more and more interesting. And, you can point to parts of Europe, you can point parts of Asia, emerging markets. So a ton of other opportunities beyond the US.
We continue with Seema Shah, Chief Global Strategist, Principal Asset Management. Seema, I look at one of the great thoughts out there, and what I've seen in the zeitgeist is Europe still wants to invest in America. Is the flow of equity purchase still coming into America?
Yeah, I mean, it's not like the tap has been completely switched off. European investors are still looking for where there's innovation and growth. But I think the opportunities have to be really compelling in order to offset the currency aspects offset the policy uncertainty. So it has to be a very interesting trade. Whereas before, just buying into the US was almost enough to get that pickup. There's just a lot more differentiation, and there's also stronger performance out of Europe. So I think the hurdle for investing in the US is a little bit higher. And it's probably more that the hurdle for investing domestically is that much lower.
Seema, the bond market, we've seen bonds, give you some solid returns in 2025, solid returns so far here in the start 2026. Where do you see opportunities in the bond market?
Look, we continue to have a fairly constructive outlook for US growth, for global growth. So that means that we can still be really focused on credit and still focus on segments of high yield, but really focusing within the higher quality segments of high yield. Probably more than anything, though, is emerging market debt, which continues to look really strong for us. And actually, emerging markets, both across the equity space and bond markets, right. We have a belief that the dollar is going to continue to weaken, and that certainly helps out that narrative. But certainly, we do think fixed income is interesting. It's just that we would have probably a greater preference for equities and other parts of the market.
Seema, very quickly here, I just looked at the 2 standard deviation chart of the Standard & Poor's 500. We haven't even had a correction.
Yeah.
I mean, where we are now, we've barely nudged. Should our listeners and viewers focus on the larger index or the uproar over technology and software?
I mean, you're right. It's interesting because there's been so much noise, and yet actually the index is pretty much unchanged. But I do think investors can be looking beyond the tech side. There's been a broadening of earnings growth to a number of different sectors. We're looking at which of the sectors that can benefit from AI, not really be disrupted by AI. So there's a lot of opportunities, and of course, valuations are more compelling outside of the tech sector. So I think for investors, look beyond the index. Look to where can analysts really provide that additional information and sophistication.
Thank you for the brief to get us started. Seema Shah with us with Principal Asset Management. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Sonal Desai or Franklin Templeton, but let's secure you into it. Robert Schiffman, I don't think he went home for the storm.
No, he stayed.
He's got like a pup tent, you know, like back in the food court down at 120 Park. Schiffman just publishes, second sentence, he notices it's snowing today. Second sentence, maybe a bond deal today, question mark.
Oh, okay.
I mean, it's like totally out in the zeitgeist.
It is. I mean, and we've seen, Rob Schiffman covers all the TMT names, the tech names from a credit perspective, and he's been writing about all these big bond deals. We've seen, Tom, from the big tech companies, and he says the market's still open. Bring them.
Inside baseball. We go to Franklin Templeton today, the woman that picks up the phone at Franklin Templeton when Google or Microsoft or Apple do a bond deal. Sonal Desai joins us, CIO, Fixed Income Franklin Templeton. So now, how does it work? Like, I get there's a bond deal, like John Deere does a thing. Okay, fine. But if a big tech company does an offering, a tranched offering, 6, 7, 8 tranches, do they call Franklin Templeton? Do you call them? Do you meet at a Starbucks? How does it work?
No, it doesn't work that way, Tom. I wish it did. I'd say that the first instance, what we have observed is that very large institutional buyers tend to have, there are discussions which take place. I'm talking about large pension funds and so on and so forth, but we absolutely participate as the deals come to market.
Do they listen to you? I mean, the heritage of Franklin on the West Coast and Templeton in the Bahamas and the huge emotional merger decades ago, do they listen to your experts, or is it almost a bond deal of a hyperscaler is dictated to the street? Which is it?
Currently, in the recent past, I would say that these hyperscalers essentially are dictating to the street. And this is the truth. Over the last year, when we look at the sheer volume of debt which has been issued, that there is a certain amount of expectation of some indigestion as we go further into this year, because even those initial assumptions that we would have around $500 billion of issuance this year has now picked up to over $700 billion. This year, itself. I'd say that we're watching all this with some caution. It's not that we think the deals will go bad, but spreads are likely to take a bit of a hit from the quantity of just the sheer volume. It's absorbable, absolutely. But I would anticipate that spreads take a bit of a hit on this quantity of supply.
So we've seen such a tremendous supply of new issuance come out of the tech space, which is a little bit unusual because the tech companies historically have had great cash characteristics, great free cash flow. They didn't really need the bond market. At what point do you think the bond market starts pushing back a little bit, maybe on the rates, maybe on some covenant language? When do you think it may shift a little bit towards the buyer gets a little bit more power here?
I think the buyer, this is the year that happens, right? Just given again the volume. And I think the first elements of pushback are coming. You see it in equity markets, and I think you also are seeing it broadly in fixed income markets, in the sense that when we looked at these issuers, they are the picks and shovels piece of AI, right? For a few years, everything was about the Mag 7 and people were super excited and everything looked wonderful. And then a lot of the tech companies who did in fact have all of that free cash flow, we are now observing that the cash flow is not quite as free anymore. It's drying up a little bit. They're coming to the market for very big capex. So I think what we might start seeing is more of the industry treating these growth firms,
right,
if you will, more like traditional, which means show us the money, show us the returns. And I think you're beginning to see a little bit of that. And since we had the picks and shovels, then we were looking, where is the return? That show me the money, couldn't find it. And therefore, I think the market switched to saying, so who's losing? And that's what's hitting software right now. Yeah. We're still in a bit of a gap, which is show me the big winners. And we don't have them yet. We can't know. And I think that's a little bit of almost cognitive dissonance right now in the market, which is we all agree AI is transformative, but who is it transforming in a positive sense?
So now let's just step back a little bit here. In 2025, fixed income had a very, very solid year with high single-digit all-in total returns here. In 2026, should I be content with just clipping coupons here? And if so, where?
Yes.
Yes.
The answer is yes. Look, we are looking at incredibly tight spreads. Everything that we see warns us to be a little bit cautious in terms of additional spread tightening. And in terms of where in the fixed income space you look for returns, I'd say look at emerging markets, look a little more global, because those areas are still underinvested for most US investors. I think it's a good time to start looking at some of this again. And I also think I would not say don't look at high yield. You should be looking at high yield. Should be looking at all of these sectors, because the market typically throws the baby out with the bathwater. All software is not in a death spiral. And you might think it is based on what we're seeing. So we are trying to look very carefully to find things which might, in fact, be mispriced in the current market.
A question from the time where Franklin literally invented, folks, triple tax-free. We make a joke about it, but somebody had to first do that, and I give Franklin all the credit. Dreyfus was there as well, but I really give Franklin all the credit. So now, it's just as simple as I can. Are the hybrid kind of debt, like convertible bonds or equity preferreds, are they attractive here, or are they a legacy from another time and place?
Come and they go. And I think converts are still attractive. You have to just be careful about which points you pick them, right? And I think that the question of whether you should be looking at interesting triple Cs, should you be looking at converts, that's always going to be front and center. And I think that continues to be the case. I think it's definitely premature to say that their day is over.
Hugely valuable. Thank you so much for those comments, Sonal. I hope compliance wasn't listening, talking about like how do you digest a bond deal. That was really informative. Sonal Desai with the CIO fixed income at Franklin Templeton. We hope she keeps her job. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Mandeep Singh with us here this morning, of course, on Nvidia. The sell side's all in on this. I looked at the A&R function. No one's not in love with this thing. Some of the, they're popping up 42% return out 12 months. Where is the confidence in Nvidia given the tech crisis that we have?
And you're right. I think the tech crisis points to the fact that this disruption is real when it comes to the AI impact. And Nvidia is the poster child when it comes to the demand that they have seen for their chips. And look, all the hyperscalers, we started the year thinking they're going to grow their CapEx 30%. Now that number is 60%.
Wow.
Some of that increases because of memory prices, but then you are also seeing an increased plans to add capacity. And that's where Nvidia will likely have upside to their numbers tonight. The question still remains around the sustainability of growth, because when you are growing 70% at the scale that Nvidia is at, $300 billion run rate for 2026, the numbers, the growth rates will taper. It's a given. So that's the part that I think the visibility is what you want to figure out in terms of how much visibility the company has and what that means in terms of growth rates.
I mean, I'm looking at the FA function, which is a consensus of all the analyst forecasts here. And again, in calendar 26 or calendar really 26, 50% revenue growth. I mean, it's just extraordinary here. What does the street need to hear from Nvidia tonight? What are they focusing on these days?
I mean, Jensen has called out demand being stronger at least 10 times, since the start of the year, CES, Davos. And yesterday, the fact that AMD had this deal with Meta where they ended up giving away 10% of the stock as warrants. To me, that's a sign Nvidia still is the leader when it comes to, everyone clamoring to get their chips. And everyone else is trying to make sure they stay in the race, which is what the move I thought AMD had yesterday.
Yesterday, basically put the surveillance cork in my mouth, and Mandeep lectured me on the use of AI. I look at it as a $20 subscription. How in God's name did they pay for the billions of data centers with $20 from Alexis, $20 from Paul, and $20 from Tom?
So right now they are subsidizing it, and it is being priced below the costs that these hyperscalers have to pay to Nvidia to get the chips, because Nvidia clearly is not taking a hit on their margins. They still have that mid 70% margins. So prices will go up. That $20 subscription will go up in price.
Is this familiar, Paul? Sounds like streaming.
I know.
And also the enterprise API usage. That's a big part of adoption. Don't just focus on the consumer.
That's corporations.
That's corporations.
They don't pay $20 per person.
Yeah, they're signing multi-million-dollar deals right now.
I mean, Nvidia, you just mentioned $300 million in revenue. I just went on to look at AMD, $45 billion of revenue. It's not even close, dude. So is Nvidia that much ahead of everybody else in terms of this story?
They are, and that Blackwell chip ramp that they showed last quarter, I mean, you will see it in full gear in the results tonight. And now they have announced the next architecture, the Rubin architecture. So that's how far ahead. They're at least, 18 months ahead of everyone in terms of the efficiency and the compute capacity and power that they are able to show with their chips.
Across the nation today, Mandeep Singh with us with Anurag Rana. I just can't say enough about Bloomberg Intelligence ability on technology. We threaten to have both of them on together, but they can't be in the same room at the same time. Okay, Mandeep, here's the real world on depreciation. I had a 2019 Intel cheese grater, fancy Mac computer. Fancy people like me can buy. It has a depreciated value of under $400. The fancy Nvidia chip in the bottom of my cheese grater is now holding up a martini at 5 p.m. I mean, tell us about the depreciation and the technological pressure that Mr. Wang is under. to get better, and everything else becomes a coffee table for a martini.
Yes, and that's a great point about the long-term, multiple that this company can get despite its growth is because of that aspect. But right now, the real constraint is power. So everyone has a finite amount of power, and you want the best compute. And that's why people are willing to upgrade to NVIDIA's latest architecture, because they can't add more power. They want to use the chip that is best optimized for the power they have available, which is why NVIDIA is releasing their new generations so quickly, within a year, in some cases.
It's Blackwell.
It is? I don't know.
Somebody whispered at him.
Look at the rental pricing of the older versions of their chips. They
rental
are
pricing of older chips.
Yes. I mean, they're still off the charts. Everyone wants to get a hold of whatever the market has to offer in terms of the rental price.
All right. So in the last 3, 4, 5, 6 weeks, we've had this sell-off in software stocks. What are you and Anurag telling institutional investors these days about that?
That it's going to take a while to clear this out in terms of these companies adapting, the LLMs situation now. They have to integrate LLMs. They have to offer, functionality that's built on top of LLMs. And it's going to take a while to play out.
Don't I just run out and buy Salesforce.com hand over fist here? I mean, is AI going to put a Salesforce.com?
Not out of business. The terminal value is not in question, but it's going to take a while to figure out the margin impact, when the growth will rebound. And it's not going to happen within a quarter or two.
Finally, Tom, these tech analysts, investors actually have to do some work. Before they could just sit back and say, my business is growing 20, 30%. He's built his career on just my business to grow 20, 30% a year.
Yeah.
In Anurag.
No, you're right. They just plug it in.
Now I think they got to oh boy.
Okay, one final question. You know why it's waiting for us here. We got to get him on. Mandeep Singh, Microsoft AI, transform with Microsoft AI where trust meets innovation. Great MBA statement. Okay, wonderful. What's the level of panic at Microsoft right now?
Good question.
In the AI wars?
I mean, look, the whole OpenAI situation is what's really causing the panic. Microsoft is still deeply embedded. To Paul's point, they're a system of record in a lot of the cases. And most likely you are going to add AI on top of Microsoft software. You're not going to rewrite, what Microsoft is doing with Office or Windows or all the other software they have. The question is, they don't have their own LLM. And that's where the reliance on OpenAI is hurting them, because OpenAI wants to get into applications themselves, and that whole thing is not panning out.
I thought LLM was a law degree out of the United Kingdom.
Yeah, I know.
I had no idea.
We
got to go. Mandeep Singh, thank you so much. Really appreciate it. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
This is going to be a delicate conversation. Huge respect for Patrick McHenry. I mean, he's in, it's like North Carolina, and it's Winston-Salem and some of the rural.
Awesome. Yep.
And these were close events. Like, he won by 70%.
Right.
He won by 71%, 72%. But Patrick McHenry, when you were serving in the House with all of your leadership, House Financial Services and all that, you knew Republicans were winning by 2% or 0.2%. I looked last night. It's a State of the Union. The judges have to show up. The winning team, in this case, your Republicans, have to show up. Some of the Democrats didn't show up. Elizabeth Warren from the Commonwealth of Massachusetts is sitting there all by herself, is a generalization. What does it mean? What's the symbolism when elected officials don't show up for the State of the Union?
Well, first of all, what the Democratic Party did, the Democratic leaders in the House and the Senate did, was effectively give over the State of the Union to a rally of Republicans. And then they left the gadflies of the Democratic Party, the far left, to make a scene. And so Hakeem Jeffries was trying to manage his members and say, don't take the bait, don't fight Trump, don't yell at him, don't do stupid things, because our voters that we need to win the midterms are people in the middle. Let's not tick them off. And yet we still saw the outburst. We saw the outburst of members getting pulled out. We saw the outburst with Democratic members using profanity in the middle of the State of the Union. I mean, this has just gotten out of hand. So bad look for the Democratic Party, huge missed opportunity for them, and in trying to give some balance to what President Trump said last time.
And it's been wonderful having you as a Bloomberg contributor, because you're really looking at both sides, even though you're diehard. I get it, GOP. He was like 12 years old when he entered Congress. I mean, it's amazing. I think about that, folks. John Tucker, what were you doing when you were 21?
I was in this seat.
Okay.
Right here.
Patrick McHenry at 21 says, I want to serve America. I think that's really cool. Patrick McHenry, the congresswoman from the 1st District in Iowa, isn't as lucky as you. Miller Meeks, Dr. Miller Meeks of Davenport, has a razor-thin vote. What kind of Democrat will defeat her?
It's going to be somebody who motivates their base, consolidates their base, but also is able to reach out to the middle, just like Mariannette Miller Meeks did when she was elected with the closest election of the 22 cycle. So she's battle tested. She knows what she's doing. She's a really hardworking individual. So you have to have somebody that is the Democratic equivalent of Mariannette. It's a very hard recruit to get. Somebody mainstream and also tenacious enough to fight in a battleground.
Congressman, this is an election year. What do you think? How do you think the president's State of the Union speech last night played for Republicans and Democrats as they enter into this election season?
Well, look, since Lincoln, the goal here, since Abraham Lincoln, the goal here is to consolidate your traditional base and then reach out to those that are persuadable. We're in a time frame where there are very few persuadables in America today. So last night's State of the Union was about consolidating conservatives, consolidating Republicans, making sure that President Trump maintains his historically high approval rating among his party, which I think he was able to do. And then reach out to those independents that he had in the 2024 election that brought him back to the White House. So that message on the economy, on healthcare, but specifically prescription drugs, his emphasis on even smaller issues on data and energy use around data centers. That type of targeted messaging was about bringing home those people that are the Trump coalition.
Patrick McHenry, you're a beast at this. I mean, you're like total grizzled pro. I got 8 ways to go here. Okay, as simple as I can. How does he get back the Latino vote that he's shattered?
Well, first of all, the visual of Minneapolis was horrifying to the American people and really shook the roundup approach that the Department of Homeland Security has had, the very high profile, very public roundups. That is really alienated Hispanic voters that came to President Trump in the 2024 election cycle. We got the biggest Hispanic vote a Republican nominee for president has ever gotten. So he's got to stop that. Number one, he's got to refocus on his success at the border, which he took a victory lap on last night, and get into the question of deporting criminal illegals that are part of crime families and gangs. When you do that, when he does that, that is a solid immigration enforcement message. Not getting in fights with liberal protesters in sanctuary cities, that doesn't look good. Nobody thinks that's effective. Nobody thinks that's smart use of federal law enforcement. And so that means he's got to get more Holman and less Noam. And that is going to be, I think we're going to see in the coming months. And they've already made that pivot.
Congressman, most polling shows that these tariffs, they don't poll very well with most voters out there yet. Are you surprised that the president, after the Supreme Court ruling, effectively doubled down on the tariff narrative?
Yes. I'm not surprised because the president loves tariffs, regardless of what the polling says. The winning message on tariffs is the geopolitical struggle with China that the West has with China. This should be the unifying element around his trade agenda. And instead of emphasizing that, which will culminate in the summit with Xi in a month's time. Or in months' time, frankly, with their scheduled 3 scheduled meetings this year. He should emphasize the job loss with China and how he's trying to bring that back through the use of tariffs, but tariffs as the means to the end of job creation and wage growth in the United States. He needs more of that and less of the emphasis on the word T for tariff.
Yeah, but let's be honest, that's not working. I mean, the average person on the street has no idea what's going on in China, doesn't care about China. All that person knows is prices at the store are very high. And I've got somebody in my ear telling me tariffs are the reason. That's a tough political play there.
It is tough. It is tough. But what I'm saying is the overwhelmingly, the bigger issue here for us with national security, with economic security, is China. And the administration has de-emphasized that in anticipation of a sit down with Xi and the hope of getting a global tariff regime and a new trading relationship with China. So they've been too quiet. And they should be stoking the American people about this challenge that we have, really a generational challenge with China. And we haven't heard enough of that. So therefore, the dominant effect is that tariffs are affiliated with price increases, which is borne out in economic data, rather than tariffs being the utility to go fight the bad guys. And we need to have a little more emphasis on fighting the bad guys.
Congressman McHenry,
if I'm strategizing for the White House, that's what I would say.
Okay, Congressman McHenry, a couple issues here. I know you haven't been north of the Mason-Dixon line since 2012. If you ever get to New York, we would blow out like half an hour of the show just to talk to you. I have such respect for you, what you did when you were in your early 20s. And the second thing is, if you come up here, you got to lose the fleece vest. You got to show up with a bow tie. Okay? I mean, that's all there is to it.
I'm sorry I don't have the bow tie on. I was much more dressed for radio this morning after a late night on the State of the Union.
I'm always dressed for radio. Actually, my bow tie I missed today as well. Patrick McHenry, he is always of the Carolinas, a Bloomberg contributor here.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.